this is what has to happen. I mean, alternatively, they can have massive tax increases on the middle class, but I don't know that you could get blood from a stone. I don't know that the middle class is even able to pay higher taxes. They could try to raise taxes on the rich, but the rich are already paying most of the income tax. It's hard to raise taxes on them. And if you raise them too much higher, you might not get any revenue because they'll stop working. You'll just tax away whatever income they had because they're not going to work if you're going to confiscate the fruits of their labor. You do have a lot of Americans who don't pay any income tax at all. So, I mean, that's, where they're going to have to look, although they do pay payroll taxes. But, I think the real solution is a reduction in government spending. But look, I mean, we just appropriated, or didn't appropriate it, we agreed to spend another, $47 billion on the Ukraine. Where's that money coming from? We don't have that money.
Yeah, another 47 billion there. The omnibus, I think, was 1.7 trillion, as you're saying. It's insane to think about all of this spending that is supposed to come out of nowhere. And you say too, when you're trying to raise taxes, that doesn't account for being able to actually cover that amount of spending, right?
No, well, the only reason the public supports the spending is because they don't think they have to pay for it, because their taxes aren't going up. But inflation is going up. That's how they're paying for it. They just don't realize that because the politicians pretend that, whoa, inflation, that's Putin's fault. That's the pandemic's fault, right? They point fingers at other people, but the true source of inflation is the government. It's the Federal Reserve, it's Congress. I mean, that is the engine of inflation, and inflation is going to keep getting worse, and that means they're just going to keep having to blame more people for it, but they're not going to accept responsibility for creating the inflation in the first place.
So, Peter, the Fed has constantly, seek this target of 2% inflation, let's say for the last decade. And now that we have over that level of inflation, let's say 5% or higher, does this create a situation where we need to get back under 2% to average back to be able to, claim that 2% is our target? How many years are we going to need to be under 2% to achieve that target?
Well, first of all, when we just got above 2%, Powell claimed that we needed to stay above it a little bit for a while to average it down because, we had all these years where it was under 2%. And so we needed to make up for that, which was all a bunch of nonsense. But clearly they're going to toss that out the window because we've just had 2 years where prices are up, let's say 15% in 2 years. How many years of inflation way below 2% will it take in order to average that back down to 2%? So so that's out the window right now. The Fed doesn't care about an average inflation rate of 2%. It just wants to see if it can get back down there, which of course it can't. But this whole 2% target was just made up out of nothing. The way it all started was the central bank in New Zealand, under a guy named Donald Bash, I think his name was, but he said that we're going to have a 2% ceiling on inflation. That's our metric, that we're going to keep inflation below 2%. And if it gets up to 2%, it's too high, and we're going to take action to bring it down. So that's where it came from, 2%. It wasn't a target like, hey, we want 2% inflation. It was just that if it ever got that high, we would have to do something about it. That was the trigger point for where we started to worry. So if inflation was 1%, okay, no big deal. We'll just watch it, but we're not going to take any action. Oh, it got near 2%. Oh no, we got to do something. We got to keep it below 2%. And that didn't mean that prices couldn't go down. If prices went down 1%, well, that was even better because that was even further below the danger zone of 2%. But somehow other central banks kind of took that 2% number and adopted it as a goal, like a target, like we want inflation of 2%. So if it's only 1%, well, that's a problem we have to solve. We need to hit that target. But this is all, BS. What they were trying to do was come up with a pretense for creating inflation. They wanted to print money to artificially stimulate the economy, to finance government spending, to bail people out. They couldn't say that. So they justified it by saying, well, we just need to do this because we need to get inflation up to 2%. But we're probably never going to see 2% again unless they completely throw out the CPI and come up with a new one, which I wouldn't put that past them, because the one we got now is inaccurate. If we were measuring prices today using the CPI of the 1970s, we would have been looking at high double-digit inflation for the last year or so, not high single-digit inflation.
Mm-hmm. Well, kind of on that theme, Peter, of these, let's say, flawed metrics, the Fed seems to really kind of rely on let's say, the unemployment rate. And on a recent interview, you stated that we have over 100 million working age Americans that are no longer in the labor market. So after doing some digging, I found a stat that in 2020, there was approximately 214 million working age people in the US. So how do we get nearly a 47% unemployment rate right now?
Yeah, well, again, just because they're not in the labor force doesn't mean they're not unemployed. But a lot of those people are unemployed, and they're just not being counted as unemployed because, they would probably take a job if they thought there was a job out there that they were qualified for. I think a lot of them have given up, or if they thought there was a job out there that could pay enough money to warrant giving up all the government programs, because if you go from welfare to work, you face a very high tax break, because not only do you pay payroll taxes on the money you earn, but you give up the money you're getting for nothing. That's maybe Medicare, food stamps, housing vouchers, welfare payments. And you can argue that the highest tax bracket, the highest marginal tax rate that there is in America, is going from welfare to work. And so that is a major impediment. So a lot of people aren't working by choice because they would rather not. I mean, I'd like to take away the choice so that, look, you work or, you got nothing to eat. If there's a job out there, then you go take it. You can't just say, well, I'd rather get my food stamps and my welfare. No, you go take that job. But, we've created this thing. It's supposed to be a safety net, but it's not. It's a hammock. A lot of people are just kicking back in that hammock. Now, of course, there are also some people that are actually working. They're just not counted, right? They're under the table. They're getting paid in cash. They're doing something, on the side, or not on the side if they don't have a regular job. But there's probably some people who are in the labor force that legally we don't think they're there because they're not paying taxes, they're not showing up in the numbers, but they may be doing some work. And of course, that's actually better than them not doing any work. The fact that there are people, I'd rather have people working under the table than not working at all, because at least, you get the benefit of their labor. They're doing something productive with their time. So, if we went to a digital currency or something where they couldn't get paid in cash, then we may lose the benefit of that work, because they just wouldn't do it. They just collect welfare. But the way the government keeps track of all these statistics, whether it's unemployment, inflation, economic growth, it's all skewed to try to put a brighter picture on a gloomy reality.